The material we have here is a financial analysis on the recent 15% drop in OKLO stock. It argues that this is a major buying opportunity, driven by short-term fear that's overriding some very solid long-term demand.
And it's a bold thesis. When you're making a case like that, the framework has to be absolutely rock solid.
Which is the perfect place to start, so let's jump right in.
I think when you're bridging these two worlds, advanced nuclear finance and AI infrastructure, your tone, the way you present the argument is just critical.
That brings us straight to the first major point. The material's use of highly sensational, almost aggressive language, while it's clearly aiming for impact, it potentially undermines the credibility of the very nuanced financial arguments being made.
It's a fundamental conflict, isn't it?
It is.
Because on one hand, you see this incredibly detailed financial information. We're talking specifics on the $1.5 billion equity program, analyst targets of, $135 to $175.
Right. And even a breakdown of the technical support zone at $87. That's the bedrock of the whole thesis.
But then that depth is it's overshadowed by these really hyperbolic phrases.
Calling the sellers paper hands, for example.
Exactly. And calling the dip the golden gift of 2025. I mean, it's memorable, sure, but it just clashes with the seriousness of the financial modeling.
It really does. And the weakness there is that for a detailed analysis report, that kind of tone risks alienating the exact person you want to attract.
The sophisticated reviewer, the institutional investor.
Yes, they need to trust the objectivity of what they're reading, and that kind of language sounds more like retail speculation than professional foresight.
You're asking them to deploy serious capital based on this. It needs to feel like cold, hard facts, not a motivational speech.
So the suggestion for improvement here is to recalibrate that tone. Let the substance, the facts themselves, generate the excitement.
The financial resilience.
Let that be the exciting part. Persuade through confidence in the data, not through these, clickbait assertions.
That shift is so key. Let the strategic moves speak for themselves. I mean, take the $1.5 billion equity distribution.
Good example.
Instead of describing it as painful now, but it gives OKLO a massive war chest, which is kind of emotional, you reframe it
as what?
As a strategic capital allocation move that de-risks the essential reactor build-out phase.
Ah, I see. So it's proactive. It immediately sounds like a calculated professional step.
Precisely. And then you can build on that. Visualize what the report calls the cash fortress, that $1.2 to $1.5 billion reserve.
Right.
You frame that as a direct, measurable counter to the fear of dilution. You demonstrate how this trade-off actually shifts the company's entire risk profile from, say, insolvency risk
to accelerated deployment.
Exactly. The capital injection itself is the story. That's what's exciting. The financial strength becomes the most persuasive element, not the vocabulary used to describe it.
Okay, that makes sense. So once the tone is right and the data is allowed to speak for itself, the next step is ensuring that data is structured properly.
Which brings us to the core buying thesis.
It's a really smooth transition because the structural integrity of the argument is the next big opportunity here.
It is. The analysis is very clear in listing out the 4 factors that drove that 15% crash.
The Oracle delay, the SpaceX rumors, the lockup expiry, and the dilution fear.
They're all there. But the report needs a much stronger synthesis that weighs those transient shocks against the real fundamental risks.
I felt this was the most vulnerable part of the whole analysis. The weakness right now is that it treats all 4 of those causes as if they're equally weighted.
And they're not.
Not at all. That lack of differentiation, it really dilutes the core argument that the market has overreacted.
You have to separate the noise from the signal. Insider selling after a lockup expiry, that's a temporary supply issue. It floods the market, but it doesn't change the company's intrinsic value.
Same with the technical drop hitting a support line.
Right. That's market mechanics. But compare that to the Oracle delay,
which is a fundamental shift in the revenue timeline, pushes it out to 2028.
Exactly. Those 2 types of events can't possibly carry the same analytical weight. If the point is that this is a buying opportunity, the reader has to understand why. Which factors were just noise and which ones actually required a recalibration.
That's a critical distinction. So the suggestion is to introduce a clear weighting mechanism?
Or a synthesis point, something that defines which factors are that temporary market noise and which are fundamental adjustments. That's how you show the reader precisely why the buying window exists right now.
You need that explicit contrast.
Absolutely. I mean, for a concrete example, you could contrast the immediate, time-bound impact of that IPO lockup expiration,
which was around December 10th.
Right. A one-time flood of supply, Contrast that with the much longer-term uncertainty from the Oracle delay. One has passed, the other is a future challenge to be managed. Their impacts are completely different.
And that really highlights the transient nature of the supply shock. It gives the overreaction a shelf life.
And the analysis already has the perfect tool to synthesize this, that technical oversold bounce section.
Right.
You just need to strengthen it. Use that $85 to $87 support line as the precise intersection where all that non-fundamental selling pressure from the lockups hit historical support.
So the technical analysis becomes part of the fundamental argument.
Yes, it tells the reader the temporary selling stopped right here for a measurable reason. It creates a cohesive narrative. Temporary selling hit a technical floor, defining a clear entry point before the long-term AI demand story takes over again.
Okay, moving on to our final area of critique. While the report does a good job establishing the bullish argument, it needs to elevate the case beyond just general industry optimism.
Yes. To get this beyond just a bet on the nuclear renaissance, the material needs more specifics about OKLO's actual competitive advantages.
The thing that validates them as the specific beneficiary of this demand.
Exactly.
The analysis makes a strong case for guaranteed demand. 24/7 baseload power for AI data centers, the big deal with Switch for 12 gigawatts. It's all compelling stuff.
It is, but relying only on that inevitable demand and high analysts' targets doesn't fully answer the investor's key question, which is, why OKLO?
Why them over every other small modular reactor player out there?
Right. A rising tide might lift all ships, but the report needs to show why OKLO's ship is the fastest, especially now after that delay shock.
So the core weakness is the lack of a clear proprietary differentiator that's tied to their execution plan.
Absolutely. And the suggestion is to anchor that bullish outlook in specific, demonstrable advantages in their timeline, their tech, their regulatory process that are directly enabled by this new capital structure.
That's the connection that's missing.
It is.
Explicitly connect them to create a unique competitive edge. That connection is vital. Let's go back to that cash fortress, the 1.2 to 1.5 billion.
Okay.
You need to explicitly connect that capital to an accelerated timeline for hitting specific milestones that competitors just can't match.
Like what?
Well, for example, detail how that cash lets them build out specialized manufacturing capabilities faster. Or maybe it accelerates their NRC filings.
Those are concrete ways the money directly mitigates the fear of future delays.
Exactly. The money buys them speed. And in a race for data center contracts, speed is the ultimate competitive weapon.
You're directly countering the main bearish narrative, the delay, with a quantifiable advantage, which is execution speed fueled by capital.
And one more thing on that. You can use the existing Switch partnership not just to show the quantity, that huge 12-gigawatt deal, but the speed and efficiency of deployment OKLO is targeting.
Which provides a really tangible counter-narrative to those speculative long-range threats.
Like the Elon Musk rumors about solar-powered space data centers.
Right, you're countering a decades-away rumor with a near-term capital-enabled reality.
Precisely. That's how you shift the argument from a generic, nuclear is needed, to a specific, OKLO is uniquely capitalized to deliver on the timeline that actually matters. That's the difference between a pitch and a truly investable analysis.
This has been incredibly focused. I think the path forward is very clear.